This is your brain on risk. This is Mind Over Money, the podcast where Kevin Cook exposes the psychology of investing.
Welcome back to Mind Over Money. I'm Kevin Cook, your field guide and storyteller for the fascinating arena of behavioral economics. Well, I'm back after a little hiatus in the podcast, and I'm excited to kick off my second wind with today's guest from a small company with a big idea. I've always been interested in understanding market structure and how it evolves, the essential institutions and the chaotic functions that allow capital markets to operate with relative fairness, access, and liquidity. Just as markets are not static, their structures and functions are constantly changing too. In just the past 25 years, technology has dramatically transformed the stock market from a slow game for the affluent to a hyperspeed playing field with access for all. And markets will keep evolving. Today, I'm going to introduce you to an evolution that I think will become an important part of market structure. It is the stock market occupying the space before a company has a chance to launch an IPO, or initial public offering. Here's how a new type of stock exchange called Forge was first described to me. Experts predicted that 2019 would be the year of unicorns, those companies with a $1 billion valuation before they've even come to Wall Street, with highly valued startups going public left and right. While we did experience some eagerly anticipated IPOs from the likes of Uber, Lyft, and Pinterest, many unicorns are choosing to delay their IPOs, thanks to secondary marketplaces disrupting the process by allowing pre-IPO trading. Founded by two of the youngest Y Combinator alumni, Sohail Prasad and Samvit Ramadurgam, Forge is one of these game changers. We will meet these gentlemen in a moment, right after I describe the primary accomplishments of Forge thus far. Forge has raised over $88.5 million in funding from Peter Thiel and other notable investors. To date, the platform has facilitated the trading of hundreds of millions of shares pre-IPO, including those of Slack, Spotify, and Airbnb, to name a few. On Forge's platform, three primary groups come together and benefit. First, the unicorns, the companies themselves. They can sell shares to investors and capitalize on their high valuations and expedite their funding without having to rush to Wall Street and do an IPO. This also allows the unicorns to bypass traditional VC funding models, so they don't necessarily need to go to VCs to invest in, round X of funding. They can just sell their shares, some of their shares, and keep innovating without outside involvement. So this is really disrupting the late stage VC model. Now, the second group that benefits are the founders and employees. At highly valued startups, they can sell a portion of their shares to investors pre-IPO. So this is also giving the people some liquidity, not just the business. So they enjoy that liquidity that was previously never offered to startup employees. So you think about not just the founders, but the engineers, the people in marketing. If they don't feel like, oh my gosh, when are we going to IPO, and they can have a little liquidity, it probably makes their work life a little easier. And then the third group would be outside investors who could never have access to these companies before because if they weren't VC. So investors can buy shares to get in on deals they may have initially overlooked. They can also sell shares to other investors and cash in early. All this goodness made me think of another benefit of Forge that I want to ask the guys about. So let's meet Sohail and Samvit. Sohail was one of the youngest founders to go through Y Combinator at just 18 years old. A fellow Y Combinator alum, Samvit, started cloud storage company Stream, which was acquired by Box in 2014. Together, they are founding partners of S2 Capital and have invested in over 100 startups. And both have further impressive resumes I may get to later, including their university training in electrical engineering and computer sciences. Go figure, right? Okay, so I'm going to start with Samvit, and just tell me, what gave you guys this idea to create this pre-IPO market platform?
Hey, thanks for having us. So Phil and I had both been in the Silicon Valley ecosystem for a number of years before we started the company. Ourselves and everyone around us, well, after you're in Silicon Valley for a while, you end up in need of liquidity because fundamentally, if you participate in a private company as a startup, either as an employee or founder or an investor in any way, you end up holding this private stock, and you have no avenue for real liquidity. And at the same time, we had our fund S2 Capital, and over the years that kind of followed after we went through YC, and we were deploying our fund in seed companies. We wanted to invest in some later stage companies, and we went and understood the market as it was, with brokers running around, and the massive inefficiency and lack of transparency made it clear to us that there was no player in the market that existed already that was really poised to be kind of the large technology player that we believe would evolve in this market to serve everyone in it. And so, we saw the opportunity. We felt that the problem was one that was dear to our hearts, given that we were kind of feeling it from every single side of our lives. So we started the company in 2014, and yeah, it's been a journey since then.
Yeah, and I have a special affiliation for this type of innovation because I came from the futures market. I started here in Chicago at the Chicago Mercantile Exchange, where the whole idea to create a market and create liquidity was to bring buyers and sellers together in a place, in a trusted platform with standardization. And that's what you guys have come into the Wild West of the pre-IPO world, and you've created a platform and you're standardizing things, and I think it's so great. So let me ask you this: this was the idea that I had too. Among the benefits I described in your accomplishments with Forge, doesn't it also take some pressure off of the unicorn that not only don't we have to rush to IPO, but we also don't have to rush and put ourselves in the Wall Street spotlight, which also becomes this treadmill of having to show, all your numbers and sales and gross profit every quarter and have that whole spotlight, as I call it, or it's almost a treadmill. So wouldn't you say that's a benefit too?
Yeah, I think that there's a time in a company's lifetime once they really have maturity and stability, when it's time for them to go IPO. I think that the companies will continue to do that. What we've seen is that a lot of private companies are staying private longer because they want to extend their hypergrowth phase. There's something that's happening when you're raising your private rounds and you're exploding and growing like a multi-stage rocket, as opposed to a company that's kind of slowly growing. And in those environments, we think that companies will continue to stay private, and as they do that, there's a need for them to offer ways to give liquidity to the people who've been participating in the company, either as early investors who've been loyal for many years, or employees who want to get liquidity. And companies are going to start to, as time goes on, more and more adopt liquidity programs to retain and attract the best talent, as well as position themselves as companies that can sustain themselves as healthy, thriving private companies for a sustainable future.
Yeah, I mean, there's so many benefits. It's the founders and boards, they want to keep control so that they, if they have a vision for their innovation, they can maintain control of it. And I think you guys told me once that the time to IPO is basically tripling because of this new type of facility. All right, I want to go to Sohail now and ask about, you guys were involved with both Spotify and Slack before they went IPO. So those companies were able to come on your platform, and shares were being traded in them before they IPO'd and did their direct listing. Can you tell us how that evolved, and where did the direct listing concept come from?
Yeah, so direct listings have been around for a while, but last year Spotify was one of the first large technology companies to actually embrace this. And what it means is, instead of in a traditional public offering where companies are actually raising money from a set of banks as underwriters and then listing their shares, those offerings traditionally have a 6-month lockup, and insiders hold on while this stock is trading in the public markets. When a company lists directly, they're saying, look, we already have a strong balance sheet. We don't need to use the IPO as a capital raising event, and their shares are immediately tradable on a public exchange like NYSE or NASDAQ. So when we worked with these companies, what we tried to do was really enable this market while they were private. There's a lot of price discovery that goes on. Most of our clients are institutions, hedge funds, venture capital firms, family offices, ultra-high net worth individuals. And so we worked with these participants, as well as the early stakeholders in Spotify, in Slack, to enable liquidity in the months and years coming up to their listing. In doing so, there was actually the ability for the company to get visibility into where the market demand is, for investors and the public to start seeing financials and other information about the company and determine how they felt about the company. So what we saw with Spotify last year is the price continued to grow smoothly in the quarters leading up to its listing. And then there was incredible stability because after the company had listed, because investors had gotten the opportunity to actually make that determination, and there was a market determination of what that fair price was. And so it went incredibly well. Slack saw that, again, a strong brand, a strong enterprise SaaS company, and they decided to go the same route where they went and listed in June of this year. And similarly, we work with them, their early stakeholders, to enable orderly trading and an efficient market in the company before it actually went to the New York Stock Exchange.
Well, yeah, and so this is an element where the Forge platform actually created price discovery before the IPO, so that investors on both sides knew what to expect. Is that a fair assessment?
Exactly. Before this, in an IPO, you had the underwriters, the banks, that are going and trying to build a book amongst their clients, trying to figure out what IPO price to set. And then you'd see large pops, effectively capital that didn't go to the company and that the company didn't get to take advantage of. And so when people are looking at both the fees that this process cost, as well as the money left on the table and the implied cost of the company, it starts adding up fast. So in the last year, you've started seeing a number of top unicorn firms, as well as their venture capitalists and board members, thinking about the direct listing as a strong alternative to the traditional process, because these companies have been able to raise money, as much capital as they need in the private market, and then they've been able to, through Forge, provide liquidity to their early stakeholders.
I think this is such an incredible innovation. Do you guys give any projections or guesstimates about how large this could grow in terms of, monthly turnover, daily turnover?
So if you take a look at how this market has evolved over the last few years, we started the company in 2014. There were 100-something unicorns that existed there in the world. Those are private, multi-billion-dollar companies. Today, there's a little under 500. And, if we project out years from now, we foresee a world where there could potentially be thousands of private, multi-billion-dollar companies. And, if you think about the shift of the financial ecosystem's focus, as people are investing more and more in growth, which is coming from technology and innovation, we think that, the market is going to continually turn its attention more and more into the space. And this asset class is going to become something that eventually should be kind of a core part of any investor's portfolio.
Yeah, and it seems like a natural evolution now, of course, in my hindsight, but I didn't think of the idea. You guys did. And it's definitely a threat to traditional Wall Street exchanges and the whole investment banking process. But I bet you they see that it's a credible threat, and it's just going to keep getting bigger, wouldn't you say?
Yeah, and we work with a number of the world's leading banks, financial institutions, asset managers, because like you said, a lot of people are now seeing this evolution. And I wouldn't see it as a threat as much as there's been, because of the systemic changes, because of capital coming into the private markets and these companies' life cycles in the private markets extending, there's that gap that we are now able to bridge and fill between the global private markets and these up-and-coming unicorn companies.
Yeah, I mean, it's obviously great for both venture capitalists and investment banks if they learn how to work with it. Now, most of my listeners are not institutions. We're just private individual investors, and so this is not. Even though we can go to your website and get an idea of things, to actually get access to potential investments, we would need to be accredited. Correct?
Correct.
But where can we learn more about the company for my followers?
Our website is forgeglobal.com.
Okay.
And you could read about a lot of the work we've been doing to enable the global investor community to actually access this asset class, whether as an individual or as an institution.
Yeah. I mean, to me, this is almost more exciting than Bitcoin, just because Bitcoin is, maybe it's a completely new technology industry. But this is a new innovation in the ecosystem of markets that was sorely needed. And so I wish you guys the best. Thanks for coming on the show. And we'll keep an eye on the latest unicorns that are popping up from Forge Global. Thank you.
Thanks so much, Kevin. Thanks for having us.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.